Welcome back to another episode of the Backholder Pod. So Nvidia recently just reported earnings and they're up 240% year to date. So the biggest hot kueh here in the Backholder panel is definitely Bunti. So I believe his average price on Nvidia was around 100 plus. I still remember vividly because Nvidia is not your typical stock that just go 45 degrees to the right. They actually went through quite a lot of turbulence. And I think back then I was still talking to Bunti about it, doing some due diligence. And I think Nvidia was having a very bad run. There was the crypto winter, gaming was slowing down. There was a lot of demand pull forward. But Bunti still managed to diamond hands. And that's how he sit on more than 100% gain right now. So I think I'll just pass the time over to Bunti and he will maybe basically brief us through the recent earnings and what's his expectations of the stock moving forward.
Okay, look at the price, right? So I think just this year up 240%. But of course, my average price is not like at 100 plus. It's at 100 plus, but not as low as 120 here. If you compare Nvidia share price right across all the large cap, right? Definitely they are standing out. You can see that year-to-date performance, 233%. Actually, Meta is 183%. I know Chicken is also another hot kueh here, but no one asked him to talk about Meta. Maybe we'll talk about it in future episodes. So stay tuned on that. The other big caps all doing quite well, like 40 to 70%. So definitely a green market, and we are heading into like a year-end rally. Just briefly talk about my cost basis. I think it's about $147. So yeah, I think it's like more than 100% gains. But this is like just 12% of my overall portfolio. So it's not like super white kueh, like a small white kueh only, okay? Okay, let's look at the results, okay? If I think the period that Chicken just mentioned is about end of last year, which is when their revenue dropped to about like 6 billion per quarters. And then suddenly within, like 2 or 3 quarters, because of all these data center chips that they're selling, all the generative AI and so on. So they have managed to increase their sales from 6 billions last year to now about 18 billions. So that's like, 3x their sales within a few quarters. So this is definitely very impressive. But if you look at the components, right, actually, aside from the data center, you look at gaming only up a little bit. Then their other business lines are quite small and they increase like just a small increase. Really, I think most of the increase in their sales, right, coming from the data center. And specifically, these are the chips that support all the, the AI developments. Then this is the numbers. Definitely, if we look at the recent quarter, I think the revenues definitely looks great. You can see that revenue 18 billions and they're guiding about 20 billions revenue in the next quarter. And you look at their gross margin, 74%. This is like really hot for them. Then operating expense, you see although their revenue increased by about like 5 billions, right? But their operating expenses kept like almost the same. So this is the impressive part about Nvidia. They have a lot of operating leverage there. Operating income, huge increase compared to the previous year from 601 millions to now 10 billions. And if you believe this income, right, or let's call it net income, about 9 or 10 billions per quarter, right, this company is already making like 40 billions a year. So if you rank by companies, right, 40 billions definitely put them like on the top 20s. If you look at historical earnings, right, they are like not even in the top hundreds. So that's interesting to just shows that their revenues, their net income all increase significantly. So the question is whether they can sustain this level of operating income over the future years. That's the question, big questions mark there. Here, this is in the form of chart. I think this is interesting. You can see that it's not like a straight line going up, right? There are periods. There's some cyclicalities. You can see that 2018s, they drop, and then 2022, also there's a cyclical downtrend. And then suddenly in past 2 quarters, it just shot up like crazy. So this is their revenue breakdown. And almost all of them come from the data center segment. Then this is the net income to the moon. Share price also to the moon. And these questions, I think, was posted by one of the analysts to Jensen. He asked him to comment on the future revenue. And what Jensen trying to explain is that this generative AI is something that is really, really huge. And they have been talking about this for many years already. What is huge is the TAM, or total addressable market, meaning that now I think almost all industry, all sectors, all these companies, from large to small companies, they are going to embed all this AI into their business model, into their product offering, their services. So the market is really huge. So that's why I think this TAM expansions provide us some visibility in terms of their future growth. You know, when we are talking about like Nvidia, they offer the best product, right? As of now, they are only one, but we all know that the competitors are coming. But while the competitors are catching up, suddenly they just released these HGX H200 chips. And then if you look at their roadmap, right, you know, before the competitors reach their H100 performance, they already moved to H200. And I suspect that before they caught up with this H200, they are already moved to the next phase of their products, which is a lot better. So in terms of competitions, I don't see any other competitors is able to catching up with them. They're so far ahead in terms of the competitions. So this is the interesting part. Then, of course, all this generative AI, right? I think the interesting now is that people heard about generative AI, they thought about ChatGPT, which is like, okay, I just text put on the text, and then what comes back is also text, right? But actually what they have been working on is not just text to text. There are a lot of other types of inferencing, like other types of product. For example, you can do like the text to image, text to video, text to 3D, text to protein, all sort of things that they can be done. So basically, this generative AI, right, is just like they process a lot of data and then synthesize it, and then they are able to give you something that you want in a very quick manner, and this enable all sorts of different services. Okay, this one I won't go into it. It's just talking about all these, CUDA libraries. This is basically backing the offerings. People don't go to other providers. They still have to go to Nvidia because they have been investing a lot in this space, in these areas. You see the number of developers also increase significantly. The download also increased significantly. So really in this area, right, Nvidia is really dominating. That's all. I hope this is a short one. We have done some homework. Bet holders pot is not just bet holding stocks. We all do homework. We all follow the companies that we invest in.
I think it's not we.
I think Bunti is the most hot here. But Kevin?
So I think like everything looks so rosy for Nvidia right now. But probably the latest obstacle is the limited sales to China, which from what I checked from the app, China is about like 20-something%, right, of their total revenue. So like then they say to offset these lower sales, they have to rely on growth from other places. So Bunti, do you see like any problems with this part?
Actually, before I let Bunti reply, I wanted to also point to a tweet, right? I think the other time they were saying in the disclosure of Nvidia's earnings, Singapore happened to be one of the highest ranked ones. So I think Singapore right now represented around 15% on Nvidia's total sale. So Singapore with a 6 million population has 15% of their total sale. So there's a lot of speculation in the community now saying that Singapore is basically the gateway to, of course, not try to play around or flout some rules that have some export restrictions, but more so being the hotbed for connecting the world together. So I don't know what Bunti's thoughts are about it, whether there'll be further crackdown, whether there'll be some enforcement down the line. But yeah, I think it's a related point with the whole China sale. I'm just speculating here. I'm not saying that anyone is flouting any rules, but yeah, Bunti.
Yeah, I used to joke, right? Singapore is not highest GDP per capita, but highest GPU per capita, right? So just buy all the GPU and plug it in Singapore. But answering Kevin's questions first on China. So I think what the news come out, right, to say that, okay, now suddenly US is banning all these sales of chip to China. I think they do it in a quite drastic manner, in a sense of they are not blocking the sales of 2024. It's just the Q4 sales also got affected. So they have to stop those sales to China and then reallocate all these sales to other regions. So the good thing is that because there's this supply demand imbalance, meaning that there's so much demand coming from all over the place. So the good thing is that Nvidia can allocate all these sales that's supposed to be shipped to China. Now they just ship to other customer first. So they can do that. So it doesn't hurt their Q4 revenues that much. I think one of the analysts also asked, right? And then basically the CFO mentioned that, yes, the guidance for Q4, if not because of this China ban, it could be slightly higher. But I think overall, it still doesn't hurt them as much, at least on a short-term basis because of all this imbalance. But if you think about it, right, China is still a large market. So the tech companies, aside from US and Europe, of course, China, there's a lot of all these startup companies, big and small, from Alibaba to Tencent to Huawei, and so many companies, right? They all need all these chips. But if there's this, let's say US keep banning the access of all these Chinese companies to NVIDIA chip, what happened is that they will just limit the total addressable market, right? The size of the market for NVIDIA, and they are giving room to some other providers from China to fill in this gap. So I think definitely this is not good for NVIDIA over the medium to long term, but at least over the short term, it doesn't hurt them as much. So that's my take on that. And then on Chikeng's question, I think that we all know that there's no way Singapore needs so much GPU. But I think that's the thing about all this chip, right? Is that, doesn't matter who bought it and then the locations, right? After you set it up, I think it isn't that hard to just use that as a base, and then you rent out all this GPU capacity to customers from other countries. So I don't think it is that hard for them to get the loophole to actually get China access to the GPU. So I don't focus so much about the locations of the customer, because, for example, right, I think in the past I look at the countries where they're selling to, and I understand that all these countries, right, is not just like the end user. They could be selling to Taiwan. Taiwan is just a very small regions, but yet the percentage also quite big. But maybe it's bought by companies like Asus to buy the chips, put into their motherboard, not the motherboard, the gaming cards, and then they ship it to US, for example, right? So you will see it recorded as Taiwan, but the end user could be anywhere in the world, right? So I won't focus so much in terms of like their, the geographic breakdown that they provided. So just ignore that. I checked with my friend. He told me that that country's allocations is just based on invoicing. Whoever they invoice to, right, that's the locations. Doesn't mean that's the end user, the locations of the end customers.
Buti, I just want to check, right? Because the data center seems like it's a very big chunk of the revenue, right? Is there any scenario where you see that there is a risk of demand slowing down or even declining from data centers, that portion? Or is it going to it's just going to continue going up no matter what?
Definitely not going to keep increasing, because we all need to remember all these data centers, right? They just shoot up so crazy. Is because of the generative AI or all this chat GPT. And we are moving from, like last year where there's no chat GPT to this year there's starting up of all these generative AI offerings to the scaling up, right? So there's like a 0 suddenly now to 1. And we shouldn't expect the 0 to 1, this phase, right, to become like 2, 3, 4, like just going up, 100% every year. I think that's impossible. It's just that now, at some point, definitely we'll see some plateau in terms of growth. And then depending on the future growth, right? I mean, at some point they will stabilize, and then the growth could, revert down to, if it is a good number, it could be somewhere around 20 to 30%. But if it is not growing as much and there's oversupply, right? Of course, it could turn to negatives, right? And all these, like chips, right? If you look at their business, I think the normal business is that they will have all this cyclicality one. It will go up and down, up and down. But what is promising is that I think NVIDIA is not just into like selling hardware, So that is like their core offerings, especially as of now. And slowly they are getting into all these services, platforms, licensing business, which is more service oriented and more stable in the future. I think one good example is Apple. Apple, as of now, still, if you look at their revenues breakdown, right, still all these iPhone, Mac, all this hardware business is still the core business. But if you look at their services, right, because of they are selling all this hardware, and hardware software need to talk to each other, and they have they are also selling, the services as well. And the services revenue will be a lot more stable. And I can see that NVIDIA is working hard to keep on doing all this service-oriented offering. It's very small as of now, but I do see that this growth will be more sustainable over the long term.
On that note, right, if now we do a projection, because like you said, from 0 to 1, right, that's why we have such a big growth rate, right? I think a bigger concern, not concern, I would say, but a bigger issue is, do you think this is the new baseline EPS or baseline cash flow they're going to print from here on? They are able to sustain. I don't need to see, I think even at a 0% growth rate, right? I think Nvidia is very interesting because that whole explosion in bottom line was, if I believe they can hold, actually I don't think they're very, very overvalued in this case, if they can hold. I think the bigger issue is now whether it will go down.
Yeah, that's the thing, right? Because if, like I said, 40 billion income, 1.2 trillion of market cap, we're talking about like 30x PE as of now, right? Assuming they can hold. But the moment their growth rate dropped to, let's say, 5%, which is technically still growing. And I believe at some point they will hit to that kind of growth rate because of the cyclicality, because of maybe their customer already have enough GPUs. Because all these GPU is not like you buy it for 1 year, then next year you throw and you have to buy from Nvidia again, right? After you bought all this, you set up your supercomputer network, all these things, you can still use it for years and years. Just that maybe the type of offerings, there's competitions, other competitors may come up with better offerings because they bought the best product from Nvidia, but still they are usable. In fact, for example, now the best one, I think, let's call it the H100, right? The A100, which is the older one, there are still many customers that are using all these older chips and they are working well. They're actually better than the competitors one. So I would say that, let's say if their growth rate slow down to, let's say like 5%, right? Then you will start asking yourself, is 30x PE something that makes sense? If you ask me 5% growth, I won't even pay, like 25x PE. Maybe 20 or 15x PE make more sense, especially if it dropped to 5% growth and you don't know whether they will drop to negative 5% or not, right? So there's always this risk of like how much has been pricing into the share price. Can they sustain the growth rate? And to answer that, right, you need to visualize that how big this market is, right? If you see that this market is huge and is growing, let's call it can grow at this level for many years, they will eventually become very big. And even with a 5% slowdown, those are fine as well, because as they grow at this speed quickly, they will drop from, let's say, like the 30x PE to like 25, 20x PE, right? But if you can't imagine the TAM, you just think that, okay, this one is just like one-off demand, and then it will, tapering off. People stop buying immediately. Revenue will drop, and then definitely this is overvalued regions.
So I think the most important question of this episode, right? Nvidia now still can buy, Bunti?
I don't know. I think we also talked about this, right? Last time when we mentioned about this, what was the share price? I also don't remember already. For me, it's a whole. I'm not adding. So I also don't think it makes sense to chase just because of people keep saying it is good, right? So there's this FOMO in the share price, in the sentiment. I definitely acknowledge that. It's just that, there are so many investment opportunities out there, right? But if you ask me whether I'm like ready to take profits, I'm not. First thing is that my allocation isn't that big. Even if dropped by 50%, I'm still can sleep well. But it's just whole and just follow their story along over the next few years and see how it goes.
I'm quite impressed though. A 12% position is not an allocation big, but I think one bigger question is there a sell thesis, or is there a trigger to press the sell button?
Actually, as of now, I would say no. Even if their revenue dropped to negative, I'm still following.
Bunti will tell you, if the revenue dropped 20% year on year, Bunti will tell you first time. But yeah, Bunti.
No, it's just that the company's the cyclicality issues is still there. You look at their past revenue, their past share price. It's common for this company share price to drop, like 50 to 70%. It happens every 3 to 4 years. So I won't be surprised. For me, it's more important to follow the long-term story and just continue to hold on it. I would say the sell thesis will be that, let's say if I see the companies become, like they lose their culture, they're doing things that doesn't make sense. Basically their innovations is that lah. Then I'll move on to other companies lah. If not, all these short term cyclicality things is not my concern.
Okay, hope you guys enjoyed the discussion, and we'll see you guys in the next video. Goodbye.